By April 2026, a quiet, regulatory Trojan horse will be fully deployed within the U.S. banking system. They are calling it a necessary update to capital standards, loss-absorbing capacity, and payment verification. They will tell you it is for your safety. They will tell you it is to prevent fraud and stabilize the system. But if you read the fine print, the actual Federal Reserve operating circulars and the FDIC mandates, it is the foundation for something much more dangerous. It is the legal framework to freeze your liquidity and specifically to trap your wealth inside the digital banking system. If you have cash sitting in a traditional mega bank, or if you rely on being able to move your money quickly to purchase physical assets like gold and silver, you are standing on the tracks and the train is coming. Welcome to Finance Uncovered. Today, we are going to break down the exact banking laws taking effect, what this April 2026 shock date actually means for your savings, and the specific steps you must take to move your cash before the exit doors are quietly locked. Let's look past the mainstream financial headlines. To understand what the institutions are preparing for, you have to watch what they do, not what they say. Right now, banks are adopting modified leverage capital standards and what is known as total loss absorbing capacity rules. These become strictly mandatory by April 2026. What does loss absorbing capacity mean in plain English? It means the government is quietly mandating that massive financial institutions hoard capital and restructure their debt to prepare for a catastrophic financial event. They are legally preparing for a scenario where they take heavy losses. And historically, when banks prepare for massive losses, the cost and the risk is passed directly down to the depositor. That is you. But capital requirements are only the first part of this Trojan horse. The second part is how they are tightening their grip on your ability to move your own money. The Federal Reserve is updating its payment terms to include a strict new payee name verification system. On the surface, consumer protection. In reality, it creates unprecedented friction. Have you ever tried to wire a large sum of money recently? Have you noticed the sudden increase in security questions, the artificial delays, the temporary holds on your own funds? This is not an accident. It is a subtle, creeping form of capital control. If they can delay your ability to move your money during an economic panic, they can maintain their own liquidity. They are building a fortress to protect their own balance sheets, using your deposits as the bricks. This brings us to the April 2026 shock date for alternative assets, specifically gold and silver. When investors sense instability in the fiat currency system, they instinctively move to tangible, historic safe havens. The megabanks know this, the Federal Reserve knows this, and they know that a massive outflow of cash from the banking system into physical precious metals is a direct threat to their liquidity. In 1933, the government used Executive Order 6102 to physically confiscate gold. Today, they don't need to kick down your door to take your metals. They just need to make it incredibly difficult for you to buy them in the first place. By implementing strict verification protocols, prolonged holding periods for large transfers, and monitoring transactions moving to precious metal dealers, they are creating a digital fence. Imagine it is late 2025. The stock market is violently correcting, inflation is resurging, and you decide it is finally time to move a significant portion of your savings into physical silver. You go to initiate the wire transfer. Suddenly, you are hit with a mandatory 72-hour hold for verification. Then, a compliance officer calls you to ask what the funds are for. Then, the transfer is flagged under the new Fed operating circulars. By the time your money is released, the price of silver has surged, supply has dried up, and your purchasing power has been decimated. This is how modern capital controls work. It is not an outright ban. It is regulation by friction. They simply freeze your ability to act until it is too late. So what is the actionable step? How do you protect your wealth when the rule makers are actively rigging the game to protect themselves? You have to move your cash strategically, and you have to do it before these systems are fully locked in. You cannot leave your entire life savings sitting as an unsecured liability on a single megabank's balance sheet. Here is exactly what the smart money is doing right now. Step 1. Disperse your risk. If you have significant cash sitting in one of the top 4 megabanks in the country, You are in the crosshairs of these new liquidity protocols. Move a portion of your operating cash to a local credit union. Credit unions operate under different, less systemic risk profiles. They are generally more tethered to the local economy than to the toxic derivative markets that the big banks are exposed to. Step 2. Secure tangible assets outside the banking system. If you have been waiting for a sign to add physical gold and silver to your portfolio, this is it. But the key word here is physical. Paper gold, mining stocks, and bank-held ETFs are still tied to the digital financial system. You need assets that have zero counterparty risk, assets that cannot be frozen by a payee name verification update and are not subject to a bank's leverage capital ratio. Step 3. Rethink your vaulting. If you hold precious metals, ensure they are stored in private, non-bank depositories. If your metals are sitting in a safe deposit box inside a traditional bank, they are still vulnerable to bank holidays and branch closures during a liquidity crisis. If the bank doors don't open, you don't have access to your wealth. The wealthy and the institutional insiders are already repositioning their capital ahead of these rule changes. They are quietly moving into hard assets while the mainstream media distracts the public with political theater. It is time you take back control of your liquidity. Review your accounts this week. Understand exactly how much exposure you have to a single institution. Don't wait for April 2026 to find out how hard it is to move your own money. If you want to understand more about the specific global triggers that could accelerate this timeline, including what is happening with the US dollar on the world stage right now, click the video on your screen. Thank you for watching Finance Uncovered. Stay vigilant, protect your wealth, and I'll see you in the next one.